Hey guys, Brian here and welcome back to the channel. In today's video, we're going to go over more questions that I get from the premium side of the Discord. And if you guys want to learn more from me and John, feel free to join the free Discord. There are links in there to how to join the premium one. It's only 340 bucks for the whole year or $40 a month, whichever one you prefer. If you want to do monthly, or you get the discount with the yearly, you could do that. But the questions are for everyone, and I get a lot of them in DMs, which is perfectly fine. I would prefer it to be asked in like the Ask Me Anything questionnaire in the Discord, but it's okay because some people think they're like too newbie of a question, or they're like maybe like shy or scared that they might be judged in the chat, or they just want their direct answers from me or John, which is perfectly fine. So let's just go over some of these questions that I get. And I personally love answering these because it helps out everybody. So a lot of the questions are it like very basic questions. It's like, so why am I choosing the strike prices, and why am I choosing for like closer ones to the money at further expiration dates, or further from the money at closer expiration dates? So right there, you could just kind of see there's just not a full understanding yet, which you will get the more and more you do this. So for the first one is, let's go with, why am I doing a HIMS play of a HIMS cash secured put at $55 for 2 weeks from now, right? So $55, and HIMS right now is trading at 58 right now, in the aftermarket closed at 59. Why would I choose 55? Well, first, 55 is just a little bit above the middle Bollinger Band on the daily, so I'm okay with that. And at the time of me making this play, HIMS was at 60, right? So I went a little bit further away from the current stock price because I'm only having it expire like 3 weeks from now. 1 full week, 2 full week, 3 full weeks. You'll only get 3 weeks, so it's a pretty close play. Whereas I also made a cash secured put play for October 31st at $57, and that's only $1 away from post market performance right now, which is a question. Why would I do that? So again, I'm always going to go over it. It's always giving yourself enough time to be right. And there's like a whole like 30 days, more 30 plus days to be right. And that is fine with me because I see HIMS going up towards 60, maybe even $70. And I also chose these plays because the next week after the 31st, November 3rd, I believe, is earnings. So they're pricing in some of these prices, some of these upgraded premiums into that price. And then I will also have more money freeing up for earnings type plays where there'll be even more premiums intertwined with the more money intertwined with the premiums because they're tying in the earnings as well. So these are like the small things that I like going over, and I like seeing in my head, and I love doing when I see my positions of when's earnings, how close am I, how far am I, and it goes into the question that I answered in the last video, how do I manage, right? I manage by understanding where the stock price is. Am I going to get assigned? Is there a risk of me getting assigned? Am I cool with getting assigned? And for the most part, I answered, because a lot of the people that are new in the Discord have never got assigned yet, which is a good thing, right? But eventually you will get assigned, and what do you do from there? So the question was then, do you just sell the shares and just go back to cash secured puts? No, you don't, because you're just missing the whole other half of the wheel strategy, right? So you start on the cash secured put side. If you only have cash, you keep doing that, keep getting income from the cash, from the cash, from the cash, from cash, and then you get assigned shares. So now you don't have cash. Now you have 100 shares. right? So now you do covered calls on that. You could either do it right at cost basis, if you just like to be cash heavy, right at cost basis on weeklies or monthlies, whatever you want to do. But remember, if you're selling for loss, that's going to be a wash sale. So you can't write that off on taxes. So I always recommend do a month. And you just keep doing that. And you can choose your strike price, like I said, to either be at cost or above it. So if it ends up running, going past your strike price and it's above your cost basis, guess what? Now you collected premiums and you also collected the appreciation as well if you get the shares taken away from you. So you just got to keep remembering that you're doing this in like a circle. You're either on the cash side or on the stock side. And then if you're on the stock side, just keep playing until the stock runs. And then eventually those shares will be taken away from you. And now you're on the cash side. Super simple strategy where you could consistently make income, whether the market is up, whether the market is down. And this is what I like to teach people. That's why I'm saying it's all about mindset. Once you are looking more towards the income and understanding that you're using the same collateral two different ways within the wheel, you're going to do very well with this strategy. And that's how I am making 10K a month. And anyone could do this, guys. Obviously, what I keep saying, it takes money to make money, but with time, with patience, you will grow your account from a small one to a medium one to a big one, and then you will never have to add money to these accounts because the premiums will grow it on its own. And that's where I'm at right now. The premiums are just growing the account on its own. The stock market is running, so whatever shares that I do have, I'm gathering appreciation as well. And I'm also not afraid to take money off the table. So if the stocks are appreciating past my cost basis, I'm cool with doing covered calls at higher deltas to get these shares taken away from me, because at that point, now you're taking money off the table. You're taking the appreciation. You're cashing out. Who cares if you're going to have capital gains tax? The whole point is to make more money, to gain more money. And if you don't take it off the table and the stock market crashes, or if it dips below your cost basis, then you technically lost money, right? You lost your appreciation and you're back below your original cost. So again, mindset shifts. Don't be afraid to take money off the table and take the profits, the income, take it all in stride. Don't worry about taxes in the sense of, oh my God, maybe I shouldn't sell this because I'm going to have a big capital gains. It's fine. Taxes are a part of life. Just save some money on the side to pay them. Simple. Grow the account, make the right plays, take money off the table, and that's it. So again, answering questions. Don't forget to join the free Discord. The premium there is amazing. And then we'll just keep it going, and I'll just keep answering more and more questions from the Discord. And I really appreciate everyone that watches these videos because I thoroughly enjoy giving this type of information out there. Thanks for watching. I'll see you guys very soon. Peace.